Hi fellow traders, I want to thank all you guys that joined us this morning on our live stream. Had a great time answering questions and just interacting with you guys, so thank you for stopping by. We're going to do it again real soon. If you like what you saw, please come and join us. It's what we do every day. You know, we're all about learning and education and getting your trading to the next level. Now, if you guys missed it, the recording is right here on my YouTube channel. It's the live day trading webinar, so you can't miss it. I'll put the link on the description part of this video, but if you go on my channel, you really can't miss it. Now, yeah, just to reiterate the message that I put up before I came on, stop watching the clock. Do what it does. Keep moving. The problem is, too many of us are still clock watchers. We go to work, we punch that clock, we do our 8 hours, and we clock out and go home. Doesn't matter what we did. You know, we don't care whether we did our job or we accomplished everything. You know, we're clocking in and out. Now, not everybody does that. A lot of people do love their jobs. But when we get to that point in our life where we want something more, we want something better, we cannot think that way. When we get into trading, we can't think that way. Now, I knew when I put that 60-hour deal out, I was going to get all kind of questions and all kind of feedback. Now, one that really stuck out, and I got an email from a guy who said, so you're telling me that if I spend 10 hours a day, 6 days, 10 hours a day for 6 days, I can learn how to trade in a week. And I was like, you're taking it out of context. You know, you didn't really listen to what I said. It takes 60 hours of focused training. 60 hours of focused learning and practice. Plus, you need to have a program that's going to help you get there. It has a clear path to profitability, and that's going to help you get there. Now, you know, it's not about the time you put in. No, it's not about the effort that you make. It's about how well you execute. All right, people, your trading profits is not going to come on how much time do you put in studying, how much time do you put in learning, how much time do you put in practicing. It's going to be purely based on how well do you execute when you're learning, how well do you execute when you're practicing, and then most importantly, how well do you execute when you get into the market. How well we execute is 100% up to us. And that's what we have to focus on. Making sure we execute every day. That we're not wasting time. And that we're maximizing every potential that we have coming our way. So just wanted to share that with you. It made me think about that when I got that email about that 10 hours a day. I should be able to learn how to trade in a week. You know, if you can give that focus 10 hours, you know, which is very difficult to do because this takes a lot of mental energy, and we don't have an infinite amount of mental energy. We have a finite amount of mental energy. It runs out. We have to replenish it. So, you know, also remember, these 60 hours is going to get you to the point where you can go out here, you can find your own stocks to trade. You can build your own watch list. You can vet your own stocks. You can trade that one strategy, and you are comfortable executing it in the market. Now, throughout that 3 to 6 month period toward profitability, you're going to learn how to trade that strategy in multiple markets. You're probably going to add another strategy or two in those 3 to 6 months because you're going to need more than one strategy in the market. You know, you can't just trade one strategy all the time. You can, but you're going to have to be even more disciplined so that you maximize your potential when the market is good, and then when it's slow, you have to walk away. You can't keep throwing stuff in, throwing the market bones, because then you're going to end up losing everything. So, just things to keep in mind. And we talk about this and we cover all of this as we're going through that roadmap. It's a step-by-step stop on the path to profitability. If you're disciplined and you're willing to execute at each level and not quit along the way and not cry because you went outside of it and you deviated from it and it didn't work, and then all of a sudden what I'm teaching you isn't working. Now, it's not what I'm teaching you, it's how you're executing. If you're going out on your own before it's time, these things are going to happen. So you got to be responsible enough to take responsibility for your actions. And if you have to restart, go back to a couple of steps so you can get back on the right track, then that's what you got to do. I do it all the time. Every time I get off on the wrong foot, I'm back at it again. I'm going backwards. I'm getting myself gathered up, and then I'm going to blast back forward. All right, so that's all I want to share with you today on that. So let's take a look at the trades we took. And again, all the trades, or I think except for one, we did this morning. So you get to see it happen live, my thoughts, how I built my watch list, how I chose the stock that I chose. I know it's a couple of hours, but you can break it down and look at it, and you get to see exactly what we do. This is what we do every day in our chat. So come on, let's take a look at it. Okay, so let's get to the trades for today. One ticker. This is what I like to do. Pick one ticker, no more than two, that I can trade. If I can hook up with one and trade it all day, that's even better. That's my MO. That reduces my exposure, helps keep me more consistent, and really, really helps me manage my risk. Today, the plan didn't work out as perfectly as I wanted to. We got half the plan executed, but that's fine. It is what it is. So again, these are the trades that are on the live stream. I trade live in the community every day, and what I did today is what I do every day. Win, lose, or draw. You see me win, you see me lose, you see me melt down. Whatever happens that day, you see. So, QCOM, I went through my process. How I built my watch list. How I vetted my stocks. So if you don't, again, go back and watch the video and the one from last week. Both of those videos will help you understand exactly what I do. And what I do is, the 30 minutes leading up to the open, I'm watching all the stocks on my watch list. And I start to get a good feel for which ones I'm going to watch the hardest. Well, this morning, nothing was really moving until the last 15 minutes, and then everything started to move a little bit. So, that's what makes it hard to wait for that first 5 minutes. Now, I know I told you yesterday I was looking at 3 minutes, and this one I could have traded on the 3 minute and probably would have made more money on it on the initial hit. But, when I make that switch, I'm not going to really be going back and forth. I want to make it and commit to it. But, for right now and the rest of this week, I'm sticking to the 5 minute. So here's the first 5 minute candle. We set the opening range high of the first 5 minutes. Once we break it, I get in according to plan. And the first target was 89. But it got up there and it just wouldn't make it. It would not crack, 89, 95, 96, 97. I mean, I know it flashed up to 89.07 or something, or '06, but it wasn't there long enough from my order to get hit. So I had to go manual and ended up hitting it at 88.95. And then we ended up getting a pullback and I get stopped out at break even. Now, the only thing that we were dealing with up here is the 52-week high. Now, this does act as resistance and support depending on if it's the high or the low. But here's what happens. There are big time traders that probably started buying it here. They started buying it up into the open. And they wanted to start. They know that if they start buying and they create a movement, retail traders are going to follow. Because we're taught early on, the sheep are taught to look for momentum. You know, look for stocks that are running up, that are making highs. So this one had a good chance of running up and making a 52-week high. So why not buy it? Get retail traders excited, get them in buying it up. And once it hits the 52-week high, we're going to start dumping our shares. You know, we're going to start selling. And it may only be, you know, a couple of big firms. It may just be one big firm. Whatever the case is, you know, it got bought up and then it immediately sold back off. So we had some profit taken there. And we kind of fumbled around here for 3 candles. And then finally, it looked like we took out all of the sellers. And so it was time to get back in. And this time we were looking for the break and the run up. Now this first one was an opening range trade. This one is a trend continuation. I'm looking to continue the upward trend that put in here. And this, I mean, really you could look at this, it could be considered a flag. And I was getting in on a continuation, but it could be a flag break. You know, anytime you can line up multiple technical strategies together, that's going to give you a stronger edge in the market. Now, that doesn't mean this trade is going to work. Now, we know the best laid setups will fail on a dime if a player in the market doesn't want it to work or wants, they have a different plan. It's not that they're looking at us. We're so small and inconsequential as individuals that it's laughable. But if they have a different plan and want the stock to go the other way, they have the ability to move it. You know, so this is why we can't have any type of expectation going into the trade. Just expect that if it hits one mark, I'm going to take it. If it hits the other mark, I got to take it. You know, either way. So this is the trend continuation up. We broke through the opening range high, hit my first target, which was 89.25. That's where I set it. I felt we could get up that high. The next target was 89.75. I was trying to give it 50 cents. I took this a little bit early because it didn't seem like we could really make that move over it, and eventually it did. So my next target, it wasn't 90.25, which it probably should have been. I had it at 90.50, and it got up to like 90.34 or 90.35 or something like that before it started pulling in. Ended up stopping me out. So maybe a little bit too greedy. I should have stuck to the 50-cent increments like I was doing. But because I went in only with 200 shares this time versus here, because I was concerned about the potential volatility of it, I kind of ran out of covers. So let's say I still had, enough shares in here, I would have taken it off at 90.25 and then let the rest go, see how far we could go, but didn't have the size for it. So, and here is where I got stopped out on the way back. Now here, I felt like this was a bullish setup. But I knew I was shorting close to the 50. I knew this. I had no doubt that this could bounce and end up taking me out. And that's exactly what it did. It could not get through the 50. It ended up taking me out. When we rejected here and showed, more weakness, I went ahead and got in looking for, it to sell through this 50 and then keep going. Now, if it didn't sell through it and got back above this opening range high, then, I would have taken it off. But it went back and tested the 9, stayed within my risk parameters, and actually made the move down. I was looking for it on the 100, but it didn't seem like we could get it. So I ended up taking it off. It finally hit the 100 over here, but it, bounced too much and stopped me out. If it had stayed under this, if it stayed under this 50, I would have been just fine. So you can look at this, how later on in the day, into 3 o'clock, you can see it just kept selling off. So I didn't want to get back in it because you can see the price action here. I just didn't feel like this would warrant a fresh entry, that it probably wouldn't, make the move all the way down, but it did. So I still don't regret not getting back in. It's the discipline that I have to have, because this one might have worked good. The next one might have started grinding up and then short squeeze. So, if I don't like it, I'm not going to mess with it. And that's kind of what happened here. But had this not taken me out, this would have been the perfect, one ticker trading all day. And that's exactly what I like to do. I can reduce my exposure, reduce my risk just by sticking to one ticker. And by then I would be intimately familiar with that ticker. So, I don't know whether it's a good thing or bad thing, but it is what it is. But this is what the daily chart looked like. And I'm showing you this because here I'm intrigued. Okay, look at the chart. This is a bullish technical pattern here. And so tomorrow we may go ahead and crack it. This was the previous high. I don't see why we can't try again and take out this high. We'll see how it opens in the morning. But this is one of the rare occasions where I would keep this stock on watch, because I think it has explosive potential. It had explosive potential today. I wish I had gotten the last half of the move, but you know what they say, wish in one hand, shit in the other, and see which one fills up the fastest. I know which one's going to fill up the fastest, so I'd rather not do that. All right, so that's it. That's all for me today. Again, if you didn't see that video from the live feed this morning, make sure you check it out. I'm going to put the link to the video in the description part of this video, so you should be able to find it easier. So you guys have a great night, great evening, and I will see you bright and early tomorrow morning.